The next move in interest rates, Australia's inflation conundrum. The recent surge in inflation has sparked a heated debate about the Reserve Bank of Australia's, RBA, next move. With the country's economy facing a delicate balance, the question on everyone's mind is whether interest rates will rise or fall. Just 2 weeks ago, Australia was grappling with rising unemployment, leading many to predict a rate cut by the RBA on Melbourne Cup Day. However, a shocking revelation has turned the tables upside down. The underlying inflation, as measured by the RBA, has climbed for the first time since 2022, casting doubt on any imminent rate cuts. This unexpected turn of events has left many homeowners in a state of uncertainty, especially those still struggling with the burden of high costs that have persisted for years. The once promised rate cut before Christmas now seems like a distant dream. Jonathan McMenamin, an economic forecasting expert, predicts that inflation will continue to slow over the coming year, and the RBA will maintain steady rates as they monitor the economy's price pressures. However, he highlights a potential risk: inflation could unexpectedly surge in the December quarter, prompting the RBA to hike rates as early as February. While this view is not widely shared yet, economists are actively debating whether the RBA has concluded its rate cuts or if a hike is imminent. Richard Yatsenga, ANZ's chief economist, advises against panic, emphasizing that it's premature to conclude the easing cycle is over and that a hike is the next move. The financial markets have responded to the latest data, pushing back the expected RBA rate cut until May, with a reasonable chance of a March cut. This shift has caused a stir in Canberra, where the Australian Bureau of Statistics, ABS, figures were met with silence from the government. The absence of a typical press conference from Jim Chalmers, the finance minister, and the shadow finance minister James Patterson's mention of stagflation have added fuel to the fire. Economists, however, remain unconvinced by the stagflation scare and the blame placed on government spending. John Hawkins, a senior economics lecturer, argues that current unemployment and inflation levels do not indicate stagflation. Instead, he describes the situation as an ugly mix that paints a grim picture of the economy's reduced potential. Yatsenga supports this view, suggesting that the economy is experiencing a tangible reality of diminished dynamism. He emphasizes the importance of productivity, which is often discussed conceptually but has a tangible impact on the economy's ability to grow without overheating and pushing inflation higher. The RBA's recent estimate of the potential growth rate further supports this argument, indicating a decline from the previous 3% to a more modest 2%. This shift could mean that the unemployment rate consistent with low and stable inflation may be closer to 5% than 4%, marking a significant change from the pre-pandemic era. As the economy continues to evolve post-COVID, McMenamin notes a familiar pattern. He suggests that Australia is slipping back to its pre-pandemic state, raising concerns about the economy's resilience and potential for growth.